the key risk is still geopolitical tensions, and so we must definitely monitor those. As speakers after me noted, that even if we do get a US-China trade deal, it's the quality of that deal that matters. You've also got US-European trade tensions, you've got Italy, and then of course the South China Sea.
If I look at the last 18 months, we've had these varying fears that have really gripped markets, right? So we've been worried about inflation, then we've been worried about growth, then we've been worried about trade wars. And I think when you think about macro uncertainty, what you need is a framework to manage that, because macro uncertainty is a part of life in today's investment market.
When you're investing into this late cycle, be mindful of volatility. And the only way to overcome volatility is to overcome your greediness, is to asset allocate according to the risk appetite that you have and be happy with certain level of returns that you're expecting. Do not chase asset classes, do not chase the hottest things in town. Right? Today could be China, last year could be different teams, another year could be gold. If you keep chasing, you're going to chase your own tail. At the end of the day, it's definitely a recipe for disaster.
We want to reassure investors that we are not falling off the edge of the cliff. And there are opportunities to be had in this environment.
I think I will borrow a line from Charlie Munger, who is the deputy CEO of the Berkshire. He recently said that the first rule of fishing is to fish where the fish are. I think that really applies to our investment. China is a market full of fish, full of opportunities. I think China market has got a very good start this year. So many investors are curious on the longevity of this bull run. The historical experience just provides some guide that a bull run without reform tend to be short-lived. So the good stock market starts with some policy stimulus, some policy support, but we do think that the structural reform really will decide on the longevity of the bull market, and that is actually one of the most crucial investment themes for us this year.
So 2019, globally, China trade, hopefully, China-US trade dispute, Brexit, hopefully will be resolved in a good way for all of us, because the IMF and World Bank are already predicting that it will be a slower year. The good thing is that the central banks appear to have been to put on hold their monetary tightening for a while. So I think that's a positive sign, because of fear of a credit crunch if they will continue on their monetary tightening path.
When we look at our client base, a lot of them have been sitting on the sidelines for the last, I would say, last 9-10 months. And given the global volatility, the geopolitical risk, a lot of clients don't know what to do, right? So with our partners, I think we bring to the table ideas, we bring to the table risk solutions, and give them direction as to what needs to be done going forward.
Okay, today I think it's all about being informed. We live in a very globalized world, and what happens in one corner of the world affects us directly or indirectly.
I'm very keen to know what is the situation now at the China, because I've invested quite a lot of fund in the China market, and also because the market now is quite volatile, so just to get some insight from this forum, what is the market direction from 2019 forward.